Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Friday, May 15th, 2026. What I want to do, I'll try to keep it pretty quick, but I just want to do, as I said in the post I just got out regarding that BOAT, BOAT, that's the shipping, one of the four shipping ETFs I covered about a week ago. I'll give you some, official price targets, stop parameters. Again, depending on if and when you shorted it, those were all listed as short setups or trade ideas back then. And then that one went on to trigger the minor sell signal break, and then the secondary trend line starting to crack through today. But most importantly, because of this, the stock market. Remember, all ships, no pun intended. By the way, I didn't mean to say that, but it's true. All ships are lifted in a rising tide, and all ships tend to go down in a falling tide. So when the stock market breaks, it's going to take, especially things that have been correlated with it. Shipping stocks at times have zero correlation with the stock markets. They can march at their own drumbeat. But lately, when you look at, we'll go to that boat, for example, everything, it's been in a bull trend along with the markets. And so QQQ, it's 325 as I talk right now. You have, it's possible, but very little chance you're going to close back on or above the trend line. If it got close enough to it, some huge late day rally, I don't see it. I'm not betting on it. I'm going home short. I'm going to tell you a couple other things that really will, what I want to do is raise that kind of that crash watch that I issued back when we were, in this trading range in here, and it never really took it off, but it's coming up to a warning now. Let me tell you a few things that may happen. Well, first of all, we have today again by 4 p.m. if things change, I'll let you know. But looks like we're going to get those sell signals that I've been waiting for. It seems like forever, but it's really not that long. This has just been a pretty straight up, powerful, but time wise, it's not that long. There's SOXX, about a zero chance of getting back on or above the trend line. And then the more diversified XSD, a little closer, again, because it's more diversified, if you were less concentration. It could do it. It could rally 3% or so and get back on the trend line, but then you're going to have the majority. So let's just rifle through the semis. But before I do that, I just want to speak real quickly to a couple things that I've been watching. And as you guys know, I updated recently. I watch it day. I have a watch list of, well, I have a lot of watch lists, but one of the ones I've been talking about is BIZD. So far in the last year, I've warned of three crashes, one being in the stock market that didn't yet materialize. We broke out under the 200-day moving averages in the trading ranges, but we hit my second target as expected, bounced as expected, but then we carried up back through there. So there was a crash warning or watch issued that never materialized. Silver, I did one, got that, but I didn't issue a crash warning until the night before Thursday, and we got that biggest crash in 50 years. And then these guys here, I did a video long before anybody was talking about private credit in the BDCs. At a break of 1574, I said would likely take these guys down here, and then that was all over the news and the headlines, and then we covered it there, reversed it, and I've kind of backed off trading it, but I very much watch it. And so where I want to just a couple things in the headlines recently I noted, besides the fact the chart, look, we're back to not far off those recent lows, and again, so my prediction was knowing what happens when they lock down. Remember, a lot of these, almost all of them, control the redemptions. They have, depending on the fund, quarterly, semi-annual, annual redemption windows, and they only allow a certain amount. And they have the right to kind of shut those down and change their mind and not let any money out or throttle it out. And that's what they did. But see, when you start doing that, especially when the chart doesn't look good, it scares people. It scared a lot of people probably that couldn't get their money last redemption period, so they're going to keep getting in line. They're going to say, you know what, until this whole thing is clear, I want out. So the headline I read yesterday is the European regulators are opening a panel, an inquiry to look into business development companies, because a lot of the big U.S. companies, it started here, but they're making an increasing presence over in the U.K., and the UK regulator, one of the politicians, somebody, I'm can't remember who was in charge of it, said, we usually follow the U.S. with everything. In this case, we're going to get in front of it because they don't want they want to make sure there's no systemic risk, no other. Remember, they're like I talked about in the very first video before we even broke my key 1574 support. I said that would carry over into the regional banks because a lot of these, the regional banks and these business development companies, remember, these evolved, private credit evolved to make the loans that the banks didn't want to touch because it wasn't clean enough. The credit didn't meet their credit or more rigid credit standards. So these are the guys kind of dealing in the shadows, almost like your bookie, Louis, that, or the, loan shark to an extent. You know what I'm saying? It's, it's a lot of not off books, it's their books. They get to keep their books. They get to mark the price as to what they think it's worth. And so all I'm trying to say is now that's being looked into. So maybe they find nothing. Maybe everything's squeaky clean, like all these BDC and private credit companies are coming out saying, no, our everything's marked fairly and our loan portfolio is solid. But prices speak louder than words. Like I always say, people lie, the charts don't lie. That's what I like to say. So that's one thing, and that may take a while. I don't know how long that commission is expected to last, but let's watch prices first and foremost. If there's a problem there, it's going to show up in the prices. So there's one thing. The other thing is the jury just went in to deliberate on the Elon Musk OpenAI Sam Altman trial. And I haven't followed it at all. It's just all in the headlines. But they did say if the verdict somehow comes against OpenAI and the company loses control, that can be extremely disruptive. And OpenAI is at the epicenter, really, if you will, of the whole NVIDIA, OpenAI, Cisco, or Oracle, circle jerk kind of money, going back and forth thing. And so I'm just pointing out things. Now that I don't know when they're supposed to come back, but let's say that happens over the weekend or later today. Again, I really haven't caught up, and I haven't seen if a verdict's come yet. But that's it. Lawyers did 7 hours of final arguments in that case, and I'm just trying to say that these are things that over the weekend, because I always have said this, guys, always that the news and the charts are really kind of tied together, and quite often a bullish development, meaning a breakout, a buy signal happens in the charts, then the headlines follow or they coincide. But right now, my point is a lot of things are set up. So if this breakdown doesn't just prove to be another whipsaw, and if it is, we'll keep doing our thing. We'll keep coming back on Monday and Tuesday, and we'll talk about, oh, wow, another big whipsaw there. But if not, I just want to let you know that there's a tremendous amount of hot air and the potential for a drop that I don't think most people see right now. So just putting out the warning. You have price targets, guys. So, if you wake up Monday or, let's say it's Wednesday next week and, you come down here, pick your target. Or I know there's some on the site that say buy every dip. Well, you can use my same price targets, which are support levels, if we do get a pullback, to go long if you think this market's going to new high. Otherwise, we could just blast right on through some of these, again, depending on what happens. I don't think the whole private credit thing over there in the UK, I think, again, that's something they're just working on putting together now, so I don't expect anything big over the weekend. However, before then, when we look at the BDCs, BIZD, we look at some of these companies, that aren't looking so hot from a charting perspective. Just rifling through a few. But let me get to the semis, because right now the semis are the bubble du jour. The semis today, SOXX, like I've been highlighting, to me is very similar to what silver was with the excessive bullish sentiment, the unidirectional run, near vertical ascent, and then the crash came. And so let's just do this video and I will wrap up. We're going to look at the state of the semis. I'll use SOXX because, again, speaking of the OpenAI, Elon Musk, Sam Altman battle going on in court right now, that's a civil trial. There's, the analogy I use, a criminal trial where if you're going to try to aggressively, all along taking some shots, it's not an all-in moment, and at least not until these primary trend lines go on a daily closing basis. You have hedges. I'll chalk on that in the end if there's time. You can keep those hedges on. There's a very well-defined trend line on TLT and ZB, but they're also at now a lot closer. Remember, for months now, I've been talking about and expecting ultimately a breakout to those new multi-year highs. And for months, I said, we're comfortably above them. We're up at the upper end of the range, but we weren't in an imminent potential risk. So when I go to TYX, I have on this chart, it has a 15-minute delay, but either way, you can see this is the range I'm talking about right here. So there's the yield. Remember, we already took out, the media talked about 5%. They were harping on that, and it is a level. You can see, I'm going to take the line across. 50 on this means 5%. You just move the decimal over. I don't know why they do it that way, but that's the yield on that. And so that was taken out. But to me, the big level are these two previous all-time high, or multi-year / multi-decade highs. And so now, guys, the risk is that we could see yields pop that level. And something I've been talking about, leaning towards. And again, whether it happens next week or 2 years from now, it should be, and especially if it's not just a pop and a drop, we peek our head through and pull back down. This is, again, so it's not completely binary is what I'm trying to say. It's incremental. And again, that's something to watch for next week. So I gave you my thoughts. Now that we have broken, we got the sell signals that I'm looking for, or should by 4 p.m. today on the market. I don't need to aggressively hedge anymore. I took those early shots when we broke on the first, minor trend lines on the 60-minute charts, starter position, and those were the ones I was hedging. So I added to my shorts today, but I didn't add to my hedges, as I said earlier. If something else happens, maybe I'll hedge back up. I still, you can still, hey, if you didn't take TLT yesterday, it's all the better today. The price is better. You still have positive AK bullish divergence on the 60, but it's almost getting burned through. There's been just no buyers stepping in today on the on treasuries. And so I think the market, once again, in my opinion, is playing Russian roulette with not one, but 3 or 4 bullets in the chamber right now, shrugging off. And I know who it is. It's not, again, it's been documented. There was an article I told you today, I just read this morning or late last night about, they know, they can see who's making the trades, the Robinhood crowd, the retail trader, the meme, the, iron, what do they call them? Iron fist, apes, and they're buying these pullbacks aggressively. And that is to say the least, a flighty crew. That will, turn on a dime, especially, and it's well documented that they're also heavily leveraged on margin. And the article went on to talk about the same folks. There's also been a surge in sports betting. I was talking to my wife about it recently and other people. You turn on the TV, you watch a football game or any sports game, and at least down here in Florida, we have the big Seminole Indian casinos. Gambling has been rampant here for a while. It's not legal in Florida except for the Indian tribes, and those are massive. And you walk into Sports Rock, Hard Rock. Any of the locations down here, you got them on the East Coast, West Coast. But now we've gone into just all out a gambling society, and they spoke to that in the articles, especially the younger generation have a very aggressively gambling. So they don't care what the P ratio or the valuation or I don't know if they're looking at charts or what they're doing. They do band together, it says, on social media and decide which stocks to run up and all that. And again, we know, all I'm trying to say has been documented, that's a large part of this this near vertical lift in the semis right now. Yeah, there's been earnings, don't get me wrong. I understand that a lot of them beat earnings, have more business than they have. But again, it's not institutional traders as much as it has been historically. So let's move on. So there's TLT. And again, you can use that as a hedge. You can use crude as a hedge. Or like I said, probably not be as hedged up now as you needed to be when we were above the primary trend lines if you were short. And run it all in reverse. Like I said, guys, I'm going to go over these levels right now, and then we're going to wrap this up so I can get out. I want to be square off my positions at the close. We're going to go through the components of SOXX as I often do. I have a watch list to the right you can see here, and they're sorted by market capitalization, so keep that in mind. Just the bigger stocks tend to have a bigger impact on the sector. This is NVIDIA, clearly broke down today. We have 20 minutes to the close, and it would take it could stick save, but right now that's on a sell signal. It broke down below that bearish rising wedge, coming off a very, very big and long extended divergent high. So for those of you bullish on this stock longer term, but maybe want to buy it on a pullback, yeah, if it tests the previous highs right there, there was a reaction high, but these are the other highs before that, then the trading range. I went over that. So these are your first two pullback targets. Any drop much below that, then you have the 200 days. My expectation is we'll start to be in unwind mode and could go down through and below there pretty quickly. But as of now, look, we're well comfortably into all-time highs, well above those support levels. Maybe we don't drop down to them quickly next week. I just want to kind of lay the groundwork that I wouldn't be surprised to see it. The odds today are bigger than they were at any point in history because of the breakdowns that I just mentioned in the indexes and the semis, or any point in recent history. Taiwan semi needs breakdown, divergent high, broke below the trend line, just made a back test, rejected. Next sell signal to come, and you can set alerts on all these. Again, I use that criminal case. Need the prosecution needs to come hard with the evidence and prove the defendant guilty beyond a shadow of a reasonable doubt. You want to do the same if you're going to short these guys aggressively or get into that SOXX. I know a few of you have been drooling, foam at the mouth to get into that one. You're going to get cut to pieces unless you have some good evidence. And so that evidence comes on this one on a break of 385.29. You can see my support levels marked, and these are all targets. And this is where I think Taiwan Semi is going to go. I'm going to tell you right now. This is, I think it can happen very fast. I've traded a lot of bubble type trades, and if silver wasn't a good enough example of just how fast a hot trade can deflate, that's from where we're at today, a 23% drop. Maybe that level gets hit. Maybe it takes months. Maybe it goes a lot higher before we go down there. But I wouldn't be surprised to see it fall that fast within a week or two. Possibly. We'll see. But again, you need to take out the next levels, and then the evidence is stronger. The case is stronger. Broadcom, 406.86. Recent consolidation there. Needs to break that. Micron, divergent high. A little minor trend line here that just got cracked. And this is your more significant trend line. And when that goes, you probably have, I should put target somewhere around right there. AMD, beautiful uptrend line, not yet broken. So here's one. This is one of the leaders, one of the real hot ones in the semis. Also the potential for an island cluster top. So should, let's say, Monday bring bad things to the market and you gap down either below the trend line, that's a sell signal, of course. Any break, whether it's a gap or an intraday break, and especially a daily close below it. Even worse would be a big gap down below it that leaves this island of candles sitting up there. And it's the easiest, one of my favorite strategies, just like I love island cluster bottoms, which are bullish. They come at the end of a downtrend. It's the same thing in reverse. You just have it an island down below separated by gaps on both sides. And when it happens, short it. You can have a tight stop above the gap if the gap is more than backfilled, or a stop above the recent highs. And again, if it happens, then there's no guarantees, but those are topping patterns. They're not correction patterns. Big difference. So if it's a topping pattern, strap on, hold on, set your shorts and let it run and shoot for at least right here. You can see I'm going to give you 3 price targets right now on AMD. And support levels about 361, 30, 311, 46, and 286, 266, 86, which from where we're at right now, poised to close, that's going to give you about a 37% drop in AMD, 38% closer. ASML, there's your trend line you need to take out. I'm going to move this one up here just to cover the bottom of that gap. Also a potential island cluster top. Again, guys, these are just potential. Have a trading plan, act on it. Maybe these guys just shrug today off and we keep doing this next week. And would it surprise me? Not in the least. Is it what I think is going to happen? No. I think we'll go down And I think there's a decent chance, based on what happens over the weekend. I know the China meeting with Trump didn't go that well as was supposed to go, but markets, they care a little bit today, not much. The S&P's only down 1%. So remember, today, on face value, to some people, might just be a run-of-the-mill pullback, consolidation day. To me, again, it means a lot more because we broke those trend lines I've been waiting to see break for a while now on the QQQ, SOX, and SSD. Intel clearly broken down below trend, so that one's done. Lam Research, Island Cluster top with a nice trend line in which to trigger dual sell signals, really, especially on a gap down. Price support there. You got a second target comes in right here. Why did I do that? You have a gap here, so there's your top of the gap, and a reaction low. They came and checked the top of the gap. So just have a correction. Again, I'm speaking to both the bulls and the bears. If you're bullish and you want to buy a pullback, this would be a great level to buy. If it's a 15% drop, you could get in Lam Research if you think it's going higher, or even as a short seller, cover a short, game a bounce there. But if and only if the majority of other big semis, and especially the QQQ and or SPY, XSD, SOXX, they're also at support at the time. Because if Lam hits this level and everything else is breaking down, let's say QQQ and SOXX have just recently broken below the next support and they're in free fall, well, it's going to take Lam down right on through there and could easily come on the way down here. I think that's a very also reasonable target. So let me just put, it's not even long-term. I'm just trying to do this long-term target LT. So I remember in the next video, if we do get some traction on these to the downside, because that's the intersecting. If it happened quick, you're going to come in with the 200-day moving averages. Remember, all stocks in a bull market, even in the strongest bull markets, all sectors, will eventually just come back. Even if they keep that bull trend intact, they need to come and check and visit. It's just like you need to see if when you leave home after college, you got to come and visit your parents from time to time. Maybe you moved halfway across the country, maybe all the way across, maybe halfway around the world. You're going to come in and visit your folks once in a while, maybe on the holidays. These guys need to come back. They last took out their 200 days right there. It was a breakaway gap. Lam hasn't even come close to its 200-day moving averages. In a bull market, that's what SOXX do. They come in, they visit their 200. So I don't think that's an aggressive target at all, guys. And that would take us from where we're at now, about a 32% drop. So I can go on, and I'm just clicking through. You can see the levels. You can screenshot or stop the video if you want to replicate any of these. Some of them, as you see, I do. I'll sometimes tweak my targets a little. There's 1, 2, 3 price targets for AMAT. It would come in if it gets there close to the 200-day moving averages down to that 319 level. And my numbers are coming up around the same. I'm talking 27%. So you're kind of getting the vibe on how much it might drop. I could go on and on and on. We're almost done. No, we're only halfway through. So I'm just going to go to SOXX for those of you, because I've had multiple requests lately. This guy's just ready to pop. I mean, this looks like a woman who's, 9.5 months pregnant, let's say. That's a wedge that is just ripe to break down. Negative divergences, very extended cleanup trend line. This is Texas Instruments, by the way, and a potential island cluster top to boot. So, all right, we either get those Monday or maybe sometime next week, or we don't. And there's a lot of other fish to fry. I've been talking about these trades a lot, only because the potential, profit potential is very high. But I just spent the earlier this week going over all the active long trade ideas and all the active short trade ideas. We have bet spread among commodities, bonds, various stocks that have no correlation to the stock market, some that have a high correlation, Bitcoin, strategy, all that good stuff. So SOXX, you can see, is taken out. Or you can see it on the daily as well. Remember, you're going to get distortion here. But now that we have, and I told you I would do this yesterday, people had asked for targets. Now that we have those sell signals, we're coming up on the close in 12 minutes, I can give you targets. So let me play with some lines here. This is almost not even a target. It's too close. It's resistance, but it would be, let me tell you, it's a pretty good move. Now, remember, guys, this has 3 times leverage. So when I'm reading you these numbers, you're going to take down your position size a third. You either short 10,000 or 100,000 or 1,000, whatever your number is of SOXX. So if you short 100,000 SOXX, you only need to buy 33,000 of, of SOXX, the non-leveraged one-time semi. Then you only need to buy about 35,000 of this guy here because you've got the juice in there. 8% to that first really resistance level. If we get there, the semis have broken down. Everything I just covered in the semis, those that were still at support, will have broken down. So therefore, I wouldn't be covering here. I wouldn't bother wasting my time to take a quick 9% profit. This is more of a target zone. I'll move that down. Now we'll make that T1. I'm going to move that down. And again, these are rough. You want to align them with the target. You already have targets on SOXX. I got those out to you recently. SOXX. T3. I can see some reaction. This is going to be a zone, really. T1 was a zone, and T2 is a zone. 2 levels in close proximity are what I refer to as target zones. T3 right there. And again, you get up to these higher ones, and there's distortion in the chart, but again, a max target, and that would have to be adjusted. This is where you had some consolidation in the semis, and I would say it's more of a zone up to that gap right there. And so if things, if we just get a run-of-the-mill correction in the semis soon, you're talking about 22 to 42% potential profit there. If it starts to get ugly, this thing's going to do about 78 all the way up to about 200 and something percent. And I wouldn't give you those targets if I didn't think there was a decent chance of it happening. All right, let me wrap the video up here so I can square off and go home the way I want to go home, which is net short. Got those sell signals. So like I said, I increased short exposure this morning, increased it again on the bounce because I could just see, again, it was an easy day, like chart wise. You just trade these levels. QQQ hitting the trend line, bounce. Look where it bounced back to. T1. That's not random coincidence. That was my first target. Went down, gap down below it. It was support. Support, once broken, yep, you got it. Becomes resistance. So that was an objective add-on. Now we got rejected there. And they'll probably sell this thing into the close. That's what I expect. I think it's clear. Again, those trend lines to me were so obvious. Blind man could see them. So I wouldn't want to be going home long semis this week. I'd be, I wish I could tell you I've been long the semis hard for the last few months. But if I had, today would be the day that I would be selling for sure. Based on everything that's happening, not just QQQ, SOXX, and SSD, treasury bonds, crude oil. This market, again, it's playing Russian roulette with not 1, but 2, 3, 4 bullets in the chamber, flirting with all-time highs, with treasuries about to break out to multi-decade highs, and crude oil at levels that has put, and especially in the biggest inflationary period since the 70s. Like, this is fundamentally, me and I know some others are having a hard time struggling, but I trade a lot of markets. I know markets, they disconnect from reality. It's all about human psychology and sentiment. Right now, it's a momentum-fueled market, but it's disconnected from reality. P ratios are at nosebleed levels only seen since before the crash of 29, the dot-com bubble burst, and even higher than the financial crisis. Margin debt is just hit all-time highs, and that's where this Reddit crowd is trading. They're aggressive. They buy only the aggressive stuff. They don't care about Procter and Gamble. That's the last stock in the world the millennials want to buy. They want to buy the hot semis. They chase the hot stuff, and it's documented in these articles I read that they do it very much on leverage. And when that train starts to reverse and go the other way, it hits the end of the station. Those European trains that go back, run back, if you go from Rome to wherever it is. And when the train comes in, they don't make a circle that it just runs backwards the other way. So that's going to be one of those kind of things, and it has a potential to be a powerful thing. And if next week's just more of the same, then it is. We'll just continue to wait for the next setup. But right now, got my pitch today, guys. Been waiting for it. So I'm going to go home short and hope for the best on Monday, and I'll give you an update then. This has been Randy Finney with Right Side of the Chart. Have a great weekend.